So today the market burst out of the gate with gusto, rallying on more evidence the American consumer is really stepping up to the plate. Holiday sales, including record sales for Cyber Monday, helped. And for those, by the way, that think that consumers are tapped or don't have more room to spend, we're just getting started. Here's the thing you need to understand and look at. Household debt servicing payments. This is as a percentage of your disposable income. This is near the lowest level on record. It goes back to 1980. Consider at the peak in the fourth quarter of 2007, it was 13%. Now it's less than 10%. That is a lot of room. Also, add into the fact that we get higher wages and then people can keep more of the money that they earn from tax cuts. We are talking about a very strong consumer. By the way, there's one reason the consumer discretionary sector was among the top performers today. And of course, we know Amazon has led the way, but we're starting to see a whole lot more action beyond Amazon, which, by the way, is up on its cloud business. And that's the pure plays in the retail space. They continue to act great. Today, it was O'Reilly Automotive, Ulta Beauty. Both names, I think, are extremely oversold. Material names also enjoyed a really good session today. Several laggards there also caught the attention of value investors. And by the way, these aren't your traditional value investors. I think it's smart money now starting to spread risk from huge gains in those high-flying tech names, and they're buying some oversold names. One name in that space I really love is Sherwin-Williams. Forget about the share price. That is a cheap stock. Speaking of value, mergers and acquisitions have lagged so far this year. That could be changing. We saw the takeover news on Buffalo Wild Wings. That woke up the entire restaurant space. The biggest winner, though, also providing perhaps the best signal for investors that this rally now riding fundamental waves and tracks, and not the notion of Fed accommodation or gimmicks. And that was Jerome Powell, nominated as the next Federal Reserve chairman. He met with members of the Senate, and he essentially hinted at 3 of 4 interest rate hikes in 2018. You know, there was a time not long ago when that kind of news would have sent the market tanking. Instead, investors embraced it for what it is, good news. Not only was Wall Street cool with that news, but regional banks and the rest of the financial sector took off. They enjoyed the best session, up 2.6% for the day. Now, while all the major indices closed at record highs, the best performing index today was the Russell 2000, and we know that is now seen as a domestic proxy for tax reform. The index, by the way, broke out last week, and today it used that old resistance point as a bouncing off point. Very convincing, very convincing. I think this rally continues, and I can only hope that you aren't waiting for that pullback. Start to develop and manage a portfolio. Being it for the long run, we are just now ramping up. In fact, the Trump economy is booming, and it may be soft data, but the hard data numbers are hard to ignore as well.